Namaste. In this video, we are going to discuss about the Indian Accounting Standard 38 that talks about the accounting transactions related to intangible asset. We will discuss about the objective, scope of this IND AS 38, definitions used, recognition and measurement criteria of intangible assets, how the useful life of intangible asset to be determined, and what are the accounting transactions in respect of impairment, retirement and disposal of an objective of IND AS 38 is to prescribe accounting treatment for intangible asset. That what intangible asset is, what are the accounting treatments in respect of intangible assets, and guidance on the cost formulas to be used, and how the cost of intangible asset to be recognized. This is booked as an expense, and circumstances where intangible asset value to be write down. IND AS 38 does not apply to intangible assets. Those are within scope of another standard. For example, deferred tax assets, leases, assets, financial assets. Those are IND AS 32, 110, IND AS 27, and IND AS 88. IND AS 38 does not apply to goodwill, acquired in business combination, deferred acquisition cost arising in insurance contracts under IND AS 104, assets arising from contract with customers, those are covered in 105, exploration and evaluation of assets, those are covered in 106, and development, extraction of minerals and gases, and other non-regenerative assets. IND AS 38 also does not apply to intangible assets. Those are held for sale. Those are covered under IND AS 2 if are treated as an inventory, or assets under IND AS 105, non-current assets, those are held for sale. IND AS defines intangible asset as an identifiable non-monetary asset that is without physical substance. So there should be identifiable asset, it should be non-monetary, and it should be without physical substance. An asset is called identifiable if it is being separable from an entity. It means it can be sold out, it can be exchanged, it can be rented, although there is no intention of management to do so, or if it is arised from any legal rights. Next is it should be non-monetary and without physical substance. And entity should be able to control the asset, and there should be future economic benefits out of the intangible asset. Control is checked whether an entity can restrict the future economic benefits to an other entity. In that case, it is called that management is able to exercise control over the intangible asset. Recognition criteria is fulfilled if there is economic benefit from the assets and the cost of the asset can be measured reliably. So the cost will comprise the purchase price of an intangible asset. It will include the purchase cost, any taxes, those are non-recoverable, are paid after reducing any discount that entity has received, and other directly attributable cost like employees cost, there may be some testing charges, etc. In respect of internally generated intangible asset, if expenditure incurred during research phase, it will be expensed off because there is no existence of the asset during research phase. And if expenditure is incurred during development phase, it will be capitalized subject to if there is probability that future economic benefits will flow to the organization and entity has intention to complete the intangible asset for purpose of use or sale, and it has adequate resources to complete the intangible asset, and it has ability to use or sell the asset. There is a technical feasibility available with it, and expenditures incurred during development phase can be measured reliably. So you can remember it by remembering pirate word. Apart from this, goodwill and other assets like brand, publishing titles, customer lists, etc., those are internally generated, will not be recognized as an asset. Internally generated intangible asset initially will be recognized on cost. And all the costs, those are directly attributable, will be part of cost of intangible asset. It can be fee to register a legal right, amortization of patent and licenses, those are used in generating the intangible asset, cost of employee benefit, or cost of material or services used for generating the intangible asset. And all the cost will be recognized as cost of intangible from the date it meets the criteria of development. And there will not be any retrospective recognition. It means that if any expenditure has been booked in P&L, it will not be part of the capitalization. After initial recognition of intangible asset at cost, an entity may choose either cost model or revaluation model to carry intangible asset. If an entity opt cost model, in that case, asset will be carried at cost minus accumulated amortization minus accumulated impairment. If it adopts revaluation model, in that case, asset will be carried at fair value minus subsequent accumulated amortization minus subsequent accumulated impairment. Useful life of intangible asset may be finite, for example, software licenses, etc., or it can be indefinite, maybe brand values, etc. In case of finite useful life, we need to assume residual value as 0. We need to amortize cost of intangible asset on systematic basis. It may be SLM, it can be WDB, or it can be unit of production method. And we need to review amortization period at end of each financial year. In case of indefinite useful life, we are not supposed to amortize cost of intangible asset, and we need to review at end of each financial year in respect of amortization or impairment of indefinite useful life carrying intangible asset. In case entity has adopted policy of revaluation model, and due to revaluation the fair value of asset has increased, in that case the increase shall be recognized in OCI and accumulated in equity under the heading of revaluation reserve. However, increase shall be recognized in P&L to the extent it reverse a revaluation decrease of same asset presently recognized in P&L. And in opposite case, if value has decreased, in that case, decrease result at revaluation shall be recognized in P&L. However, the decrease shall be recognized in OCI to the extent if there is any credit balance revaluation respecting that asset. And the revaluation reserve be transferred to retained earning if asset has been retired, or it has disposed, or revaluation reserve may be transferred to retained earning based on the usage of asset. Asset will be de-recognized from books of accounts on disposal. There is no future economic benefit expected from intangible asset. Disposal gain or loss, value and carrying amount will be recognized in profit and loss account, and it will be recognized as non-operating income.